Thanks for clicking. My name is Mark Mitchell. I'm a mortgage broker here in London, Ontario. A report just came out this week showing what many of us already knew, that real estate investors or house flippers are accounting for an even greater share of the homes being purchased in Ontario, which is helping to drive up the price of real estate in Canada. The report issued by Terranet showed that over 25% of real estate purchases are now being done by those who hold multiple properties, or real estate investors. Given that prices have risen over 30% since the beginning of the pandemic, and many first-time homebuyers have been shut out of the market, we've been told constantly by our leaders, by the banks, by a lot of the so-called experts, that it's simply a matter of supply. It's simply a matter of building more houses. But this report does seem to shed light in a different direction, showing that it's not just a matter of supply, but it's also a matter of who is buying up what, and that the buyer demographics have actually changed substantially since the beginning of the pandemic. So what I want to do today is briefly go over the report, as I think there's some really key insights in it. I want to go over some of the major problems with this shift in buyer behavior. And then I want to also finally go over what to look for in the future, as there very well could be some light at the end of the tunnel for first-time homebuyers, which I think this report does illustrate quite well. We did just have the throne speech where the government outlined a number of key changes that it wants to make to Canadian real estate, and obviously we'll have updates out on that as they come out from both the government and from the opposition parties. And we do have our weekly China update, so make sure you click like and subscribe if you want to get those updates. But for now, let's get into this report. When we look at this report, it shows that as of 2016, the distribution between those first-time home buyers and those real estate investors buying up properties was roughly equal. We then see a big shift after 2016 where real estate investors were buying up more and more properties, and that gap did widen by quite a bit, but then we did see that start to narrow again by 2020. Then, when 2020 hit, the gap exploded. So as of right now, the amount of home buyers that are real estate investors, those who own multiple properties, accounts for about 25% of the market, whereas first-time home buyers account for about 22-21%, depending on the graph. There are two big problems that I see stemming from this report. The first one being for the everyday first-time home buyer. The first-time home buyers, a lot of them, obviously from the report, have been shut out of the market as prices have gone up so high. So, with prices going up over 30% over the past 2 years, there's a lot of Canadian families who've had their dreams of homeownership dashed. They can't get into the market because the prices have just gone too high. And I've seen that every day in my business. It's definitely spread, and it's all over Canada. And I think it's a real problem for Canada and for Canadians in general. Homeownership is ingrained into our psyche. It's a lot of people set their goals on that, and it provides all sorts of financial security for everyday Canadians. So I think that the loss of that financial security for Canadians is definitely a problem, and we're going to feel the effects of that now and well into the future, as it does have all sorts of spin-off effects that are really not part of the scope of this video. But homeownership has a lot of spin-off benefits that I think need to be considered when we're looking at the future. Second, when we look at the timing of the split, a lot of this real estate investment came in 2020 when rates were ultra low, when interest rates hit the floor, because we needed to encourage business investment and help a business operate and get money out into the economy. But that era of cheap money is coming to an end. So I don't see that these multifamily investments, that these real estate investors can continue in the same manner in which they have been buying up multiple properties and flipping them, which has helped bid that price up higher and higher and higher. Eventually, they are going to exit the market. They're going to have to as rates go up, and we've talked about this in other videos. As interest rates go up, it does change the profit motive. It changes the calculation as to whether or not it is worth it to buy up a property, fix it, and sell it. If you have to pay 5, 6, 7% interest on your investment in order to make a 10% profit, well, you're only making 4%. That's a big difference than if you're only paying 2% for that initial investment. Then you're making 8% on the flip. So that does change the profit motive, and I think a lot of the money held by real estate investors will find a home elsewhere, which is good news for first-time home buyers, and we'll get to that. But I think there could be a real problem when thousands and thousands of real estate investors dump their properties onto the market. That could very well create a major correction in the Canadian real estate market. And I know a lot of first-time home buyers are thinking, great, good, finally, I've been waiting for this. And yeah, definitely, I agree. But on the flip side, that could cause a big problem with the banks. A large part of the 2008 financial crisis was due, at least contributory, without getting into AIG or any of the other insurance or derivatives or anything like that. But a large part was a major real estate correction and banks being underwater and homeowners being underwater on the properties that they owned. I'm not saying that a major correction isn't sustainable, but I'm saying that it does increase the likelihood, or at least increase the risk of a crash, which, believe it or not, would not be good for Canada as a whole. 2008 is generally not seen as a good thing in the history books. So I think this could create a problem, and it's definitely not something that we're used to. Seeing this huge, massive disparity between real estate investors and first-time home buyers. In fact, if we look at the chart, it's this disparity is huge, especially by historical standard. So I think that points to a real big change on the part of who is buying houses in Canada, and I think that could definitely become an issue in the future once rates start to rise. But I think that also points to some light at the end of the tunnel for first-time home buyers who are hoping to get into the market. Once rates start to go up, I think it's very possible that a lot of these real estate investors will leave the market and they will start to invest their money elsewhere. If they might choose the stock market, they could choose other business opportunities. But once the worries about inflation start to subside, and rates start to go up, which we've been told that they're going to over the next coming year, 2 years, even 3 years, then I think that's definitely going to change the profit motive. It's going to change the dynamics for these real estate investors who could very well exit the market. If 25% are not going to exit the market, but if a good substantial portion of them take their money and go elsewhere, well, that should definitely help to open up supply for first-time home buyers. Granted, I really don't think that we're going to have a real estate crash here in Canada. I don't think that's in the forthcoming or in the oncoming anytime soon. There's just too much money out there, and there's too many people waiting to get into the market. But it should definitely help to relieve some of the pressure onto the real estate market that's obviously been put on by the real estate investors and the house flippers and those who kind of rode the wave, the era of cheap money, as it were, for the past 2 years. When that will be, when the interest rates will start to rise, is going to be largely dependent on updates on the economy, on the inflation data, and on the current state of our recovery from COVID. So we will have updates on those as they come out. So make sure you click like and subscribe to get those updates, and thanks for watching.